welcome to the deep dive. Today we're jumping straight into the first quarter 2025 results for a major entertainment player.
Yep, we've got the shareholder letter, the earnings call transcript, some financial news too.
Exactly. And our mission, as always, is to really unpack what matters performance, future plans, and, what it all signals for the wider industry. Okay, let's get into it.
All right, so the first thing that really jumps out is just how strong the financials were for Q1. Really robust.
Strong how? Give us the headline numbers.
Okay, so revenue was up 13% year over year. That hit $10.543 billion. And, considering the market, that's pretty significant growth.
13%, wow. And that beat their own guidance, didn't it?
It did, both revenue and operating income. Operating income climbed 27% to $3.347 billion. Again, better than they predicted.
So things are looking pretty healthy financially. What about margins and earnings per share?
Also strong. Operating margin landed at 31.7%, which is quite a nice increase from 28.1% the previous year. And the diluted EPS, earnings per share, that came in at $6.61. That's up 25% year over year.
Right. So across the board, pretty impressive numbers. What's actually driving this? What they point to?
Well, the letter really highlights two main things. Membership growth, so getting more subscribers, and the impact of higher prices they've rolled out.
Makes sense. Any other contributors?
Yeah, they mentioned ad revenue contributed slightly. It's still a smaller piece, but it's adding to the pot.
And did the earnings call add any regional color to that?
A little bit. They noted UCAN, so U.S. and Canada, growth was a tad softer in Q1, but they expect that to pick up again in Q2, partly because the price changes will be fully baked in by then.
Got it. So a solid financial start to the year. Okay, let's look forward then. What are the big priorities for 2025? How's the progress looking there?
A huge one is always improving the content, the series and films. And Q1, well, it seems like their strategy paid off.
How so? Any specific examples?
Yeah, they highlighted several titles that hit their all-time most popular lists, the series Adolescents, for instance.
Right. And then films like Back in Action, Ad Vitam, and Counterattack, all big performers.
Do we have actual viewership numbers for those? I know they can be a bit selective with those.
They shared a few. Adolescents apparently got 124 million views.
Yeah.
Back in Action even higher, 146 million.
Whoa.
And Ad Vitam pulled in 63 million, Counterattack 59 million. So yeah, these are significant numbers, not just niche hits.
That definitely suggests their content engine is working. Is it hitting diverse audiences, do you think?
It seems that way. Having successes across both series and films, and likely different genres within those, points towards, catering to a broad range of tastes globally.
Okay, content's one priority. What else? Advertising seems to be a big push for them.
Absolutely. Growing the ads business is key.
Yeah.
And the big news there was launching their own in-house ad tech platform.
The Netflix ad suite, right? Launched in the U.S.
Exactly, April 1st in the U.S. And this is a big deal because owning the tech gives them, much more control over ad serving, targeting, measurement, the whole 9 yards. Strategic advantage, potentially.
Definitely. They plan to roll it out in other countries soon, and they're expecting to roughly double ad revenue this year in 2025.
Double it. That's ambitious. How's the feedback been?
They said early feedback from advertisers is positive. Apparently, the new platform offers more flexibility in how advertisers buy spots, which is something they wanted.
Okay, makes sense. So, content, ads. What about the newer ventures? Live programming and games.
Yeah, this is where things get interesting, kind of diversifying. Live programming seems to be gaining momentum.
Like the WWE Raw deal.
Precisely. They mentioned it's consistently in their global top 10, which is a good sign. Plus, they've announced more live events, a boxing rematch, Taylor vs. Serrano 3 in July.
Oh, interesting.
And they picked up a second NFL game for Christmas Day 2025.
So they're leaning into live sports and events. Why? What's the strategic rationale there?
The shareholder letter talked about outsized positives around conversation and acquisition, meaning these live events generate a lot of buzz, social media talk, press coverage, which helps bring attention to the service and potentially attracts new subscribers who might come specifically for that event.
And they're localizing some of this too, right? Like in India?
Yeah, they specifically mentioned exclusive WWE rights in India, including Hindi commentary, so tailoring it for key markets.
Okay, live events make sense for generating buzz. What about the gaming side? That feels like a tougher nut to crack.
It is. Their approach seems focused on accessibility and mass market appeal rather than maybe hardcore gaming initially.
What kind of games are working for them?
They highlighted a few categories: narrative games based on their own IP, like Squid Game Unleashed.
Ah, leveraging the big hits.
Exactly. Also bringing in established titles like Grand Theft Auto. Then there are games for kids they mentioned. A Peppa Pig game is coming, and they're exploring social party games too.
So, a bit of everything. Are they throwing huge amounts of money at it?
They emphasize measured growth in investment, which, probably reflects how competitive and hit-driven the gaming market is. They're being cautious.
Understandable. Okay, so despite these new areas, the main goal is still steady revenue and profit growth.
Absolutely. That remains the core objective. They actually reaffirmed their full year 2025 guidance.
Such was.
Revenue expected between $43.5 and $44.5 billion dollars, and an operating margin of 29%.
And the outlook for the current quarter, Q2.
Even stronger, actually. They're forecasting 15% revenue growth and an operating margin of 33% for Q2. So yeah, they seem pretty confident.
Okay, let's circle back to content specifically. What else is coming up that subscribers should know about?
Well, they sounded pretty optimistic about the 2025 slate overall, a mix of returning favorites.
Like which ones?
They mentioned the final seasons of Big Mouth and You are coming.
Ah, big one's ending.
Yeah. Plus, obviously, new shows, new films, maybe some unexpected hits. For Q2, they specifically flagged new films like Nanas and Straw, and new series like Forever, The Royals, El Eternata.
Lots of new titles. Any returning shows in Q2?
Yep. America's Sweethearts, The Dallas Cowboys Cheerleaders, a new season of Black Mirror, and Ginny and Georgia are all slated for Q2 as well.
Okay, a busy quarter. And the elephant in the room, Squid Game.
Right. The final season that's set to debut June 27th, 2025. Huge global event, obviously.
No doubt. Are they doing anything else around it?
Yeah, they're timing an update to the Squid Game Unleashed game with the season launch. And they're still pushing the franchise through consumer products and those live experiences like the Squid Game, the experience thing expanding to London.
It's incredible how that one show became a whole universe.
It really is a masterclass in franchise building.
Now, a big part of their strategy is global, but also local. How are they tackling that? Producing content everywhere.
Pretty much. They emphasized making locally relevant content, and they're now producing in over 50 countries.
50? Wow. Any examples of where that's working well?
They pointed to the UK, said their investment in local UK content has directly led to them capturing a bigger share of TV viewing time there.
Interesting. So local investment pays off in engagement.
Seems so. They also highlighted big investments they're making in the creative communities in the UK and Mexico, sort of nurturing local talent.
And are they experimenting with different types of local content too?
Yeah, trying your formats. They mentioned a toddler learning series, Mrs. Rachel, and just generally exploring different kinds of reality shows to appeal to various tastes and regions. It's definitely moved beyond just buying global rights.
That localization feels crucial for long-term growth. Okay, let's shift gears slightly to monetization. How are they fine-tuning things there?
It's about refining the plans and pricing, really. They need the revenue to keep investing, right? They said recent price adjustments are performing as expected.
Any specific markets mentioned?
They noted the price changes in France were already built into their 2025 guidance, so no surprises there.
And the ad business plays into monetization too, obviously. You mentioned the new platform.
Right, the Netflix ad suite. The promise there is better tools for advertisers, better measurement, targeting more ad formats, and importantly, better programmatic capabilities.
Programmatic, what does that mean in practice?
It essentially means using automated systems, algorithms, to buy and sell ad space more efficiently and target specific audiences much better.
Okay, so more sophisticated ad tech. Where is that available?
It's already launched programmatically in the US, Canada, Europe, Middle East, Africa, and Latin America. Asia Pacific is coming in Q2. They expect the ads membership tier to keep growing as this rolls out.
So it's a multi-pronged approach. Subscription tiers, price adjustments, and a growing, more sophisticated ad business.
Exactly. All feeding into the revenue picture.
Speaking of the financials again, what about cash flow and how they're using that cash?
Cash flow looked really healthy in Q1. Free cash flow was $2.7 billion.
Up from last year?
Yeah, from $2.1 billion in Q1 2024. And they kept their full-year forecast for free cash flow steady at around $8 billion.
And what are they doing with all that cash? Paying down debt, buying back stock.
Both, actually. They paid down $800 million in senior notes in Q1, and they bought back a lot of stock, 3.7 million shares, for about $3.5 billion.
Wow, $3.5 billion in one quarter. Is there more authorization for that?
Yep, still $13.6 billion left under the current share repurchase authorization, so plenty of room there.
What are their stated priorities for capital?
It seems pretty clear. First, reinvest in the business for profitable growth. Second, keep enough cash on hand for flexibility. And third, return excess cash to shareholders via buybacks, especially if they're not doing any major M&A.
Makes sense.
Oh,
Okay, strong financials, clear capital plan. How do
yeah.
they see themselves positioned in the very crowded entertainment space?
They definitely acknowledge how competitive it is, but they also emphasize their scale: over 700 million people and households that use the service globally.
And most of those are outside the U.S., right?
Yeah, two-thirds are international. They see their ability to program for that huge, diverse global audience as a key differentiator.
So what's the core strategy to compete?
Keep improving the content. Focus on appealing to local tastes first, and make it super easy to access globally. Crucially, they believe they're still just scratching the surface,
Meaning,
meaning they think there's still huge potential in terms of how much people watch, how many households they reach, and how much revenue they can generate from their addressable market. Lots of runway left, in their view.
that's a bold outlook given the competition.
Yeah.
Okay, last couple of areas. Any interesting tech developments or leadership changes?
On the tech side, AI is definitely something they're exploring, but the focus seems to be on using AI tools to help creators make better content, not just cheaper content.
Like how? Any examples?
They mentioned things like using AI for set references, helping with VFX prep, even de-aging actors. They cited Rodrigo Preto's film Pedro Páramo using that tech.
Interesting. Anything else on the tech front? Discovery?
Yeah, always working on the recommendation engine, obviously. They're testing a new, simpler TV homepage design that might roll out later this year, and exploring things like interactive search using generative AI.
Cool. And leadership? Any significant changes there?
A couple of notable ones: Reed Hastings has shifted from executive chairman to just chairman of the board, and he's now a non-executive director.
Okay, stepping back a bit more.
Seems like it. And also, Tim Haley, who's been on the board for ages, over 27 years, isn't standing for re-election. So, some evolution in the boardroom.
Right, some shifts there. Okay, so let's try and wrap this up. If you had to summarize the key takeaways from this Q1 deep dive, what would they be?
I mean, the big picture is really strong financial performance. The core subscription business is driving growth, and those newer bets and ads and live events seem to be showing, encouraging early signs.
And strategically.
Still focused on heavy content investment, pushing that local content strategy globally, and being pretty disciplined about returning cash to shareholders.
Yeah, this definitely gives a much deeper picture than just the headline numbers. You see how all the pieces, the content, the tech, the ads, the global reach are meant to fit together.
It's a complex machine.
So that brings us to the final thought for our listeners. Thinking about everything we've discussed, their ambitions, the competition, this push into new formats and global markets, what do you see as the biggest opportunities, but also maybe the biggest challenges facing this entertainment giant in the next few years? Definitely something to chew on.